So when will that happen? I don't know. Like, is it an if? It's not an if, it's a when. It will happen, because I can't really imagine that we live in a world where 30,000 people don't want billions of dollars of money. Like, sometimes I'll talk to these big investors and they'll say, well, what's this thing with Bitcoin? I say, well, it's digital property. It's a dominant global digital asset network, and it's a lever. And here's the reason it's better than credit or bonds or real estate. Here's how it fits in your portfolio. And they're like, I got to think about it some more. And I try to always be very polite, but in the back of my head, like, I'm like, you have $25 billion in your portfolio and you generated 2% yield last year, which is downright embarrassing because the S&P was up 25% and a freaking robot could have got 10x what you got. And I'm thinking, you must not like money that much. Like I'm listening to you. I'm telling you, take $1 billion, take $2 billion, buy Bitcoin, put out a press release, explain why you bought it, and wait, and you're going to double your money. You must not like money, right? Like, because it would take you, I don't know, not that long. It's not easy to make billions of dollars. It's not easy. But there is one easy way, Bitcoin. Bitcoin's the easy way. And it all comes down to what's your balance sheet, right? It used to be that someone with $50 million could lean on it. You saw our impact. We started with 500 million. We really started with 250 million in capital that we could invest. And so now we're up to 5 billion. But what happens when someone comes in starting with 5 billion, right? And I think that the future is a function of what everybody else in the world does. And there's a lot of people that have a vested interest in discovering this. This is a solution to a lot of problems. It's a big tech solution. If you're Apple, you can take your market cap up by $2 trillion. Okay, so does someone at Apple want to make $2 trillion? Presumably. There are a lot of big tech companies, Apple, Google, Facebook, Amazon, Microsoft, to just name a few. They could make $100 billion to $1 trillion. Will they? Not all of them, but somebody will. You've got all the nation states. Let's take Turkey. Turkey could print $1 billion worth of lira, buy $1 billion of Bitcoin, and denominated in lira, double the price of Bitcoin in lira, right? It's a simple trade. In the Emirates, they could just buy $1 billion, 10 billion of Bitcoin with DRAM, right? They have their own currency. Take your own currency, convert it into property. It's a reflexive trade. It doesn't work for the last entrant to the market, but it works for the first 5%. So it's an obvious trade for a nation state. It's an obvious trade for any company. And if you're a municipality, like a mayor, the mayor of New York, if you go check New York municipal debt, they can borrow money at 1% interest. New York could go borrow $1 billion. I mean, here's the real Bitcoin bond. You borrow $1 billion at 1% interest, you buy Bitcoin. Better idea? You borrow $10 billion at 1% interest, you buy 10 billion of Bitcoin. So do this thought experiment. What would happen if you woke up and you read a press release from the mayor of New York saying, we just issued $5 billion of debt and we're going to buy Bitcoin with it to fix the balance sheet of New York City? What do you think would happen to the price of Bitcoin? The distinction that I make, I think it's helpful, is you've got a portfolio. Let's say you have $100. What portion of it is a savings account that you want to save for 100 years? 10 years at least, a long time. That portion you want to save in strong property. In an inflationary environment, if you're going to save money for 30 years, you either got to buy land or some strong property, and Bitcoin, I think, is the strongest property. And you decide what. I mean, I respect any decision. You want to buy art, you want to buy land, you want to buy trophy assets, you want to buy something that'll hold its value for 30 or 40 years. You do that, you're a saver. It becomes pretty obvious if you live in Argentina and I told you the currency is going to lose 75% of its value in the next 12 months. If you're switching from the peso to the dollar, you're just a saver, right? You're not an investor.
Yeah.
It looks like an investor or speculator, but you're not. You're just converting from weak to strong asset. There's another part of your portfolio. You're an investor. Okay, you're taking risk. Like, is Apple better than Peloton? Is it better than GameStop? Is it better than ETH? Is it better than Solana? Is it better than Uber? I don't think there's any risk, and I think that a lot of people misperceive the network effect that's already there. So first of all, I know Manhattan well. I've sailed around it. It's sitting between the East River and the Hudson River, and I've gone up the Hudson River. The Hudson River is nature's great highway. It's a mile wide. It's pretty much straight the entire way, except for the bend at West Point, which is why they built that fortress at West Point. And you can't help but conclude this is the perfect place to build a seaport if you're going to create a country. So Manhattan is the greatest city in America because of its geographic setting, because of the rivers, the ports, your ability to harness water power, air power, sea power, and also because of that schist and the rock. Having said all that, there are many great cities in the world. There's London, there's Paris, there's Tokyo, right? There's Hong Kong, there's Singapore. They've all got a story, okay? And so ultimately, if you're going to own Manhattan property, you're competing against all those other cities as well. Let's look at Bitcoin. Well, Bitcoin's the greatest city in cyberspace. The difference here is, you don't need 25 great cities in cyberspace. You definitely need one. But if you're a wealthy business, if you're an asset holder in Beijing or Tokyo or Moscow or London or Paris or Rio or New York or California or LA, all of them can park their money in Bitcoin. And so in that regard, being the greatest piece of real estate in cyberspace is an advantage. The other advantage is there's only 21 million city blocks, whereas if you look at New York City, they can develop that and they expand it out to the boroughs, to Queens and to Brooklyn, and there's zoning and you could build up, and there's no, there is some scarcity to the acreage, but there isn't necessarily the same scarcity to the square footage, and it's uncertain and it's very political. And because it's very political, it meant that it was dilutive, and you could be dilutive or you could be impaired, right? You could own an apartment building in New York City and a politician could pass a law or rent controlling it, and now all of a sudden your rent is capped by 1/3 of what it should be, right? And that's not a hypothetical, right? That's a real. And so Bitcoin is advantageous because the 21 million blocks are probably capped there for 10,000 years. And if you own a block of Bitcoin, you could rent it out to any bank or a counterparty anywhere in the world at the prevailing market rate. And the mayor of San Francisco or New York can't rent control your block of Bitcoin. So that's another big advantage. In terms of speed, you got to keep in mind, like 10,000 companies could buy $10 billion of Bitcoin each and just hold it on their balance sheet. And then, the network will be worth $100 trillion, and it wouldn't have to move more than once every year, once every decade, right? The underlying asset doesn't have to move. Let me ask the question, how fast do blocks of granite underneath Manhattan move? How often do you have to move a city block underneath a building in New York City in order for New York or the land to have value? The point really is the foundation doesn't have to move. The foundation just has to exist.